Hi, I'm Chris Layzell and I'm the Head of Mortgages here at Bigmore Associates. And I wanted to discuss interest rates and what happens at the end of your existing mortgage deal and what the next steps are. Between now and Christmas, there are 1.4 million mortgages coming to the end of their tie-in period. This could see your interest rate rising from around 2% to 8%, which obviously has a massive knock-on effect onto your monthly payments. If you take no action, you will move on to your lender's standard variable rate, which at the moment is around 8%, but that is linked to the Bank of England base rates, which are ever increasing and will increase almost on a monthly basis as it stands. So the most important thing you can do is take action, and the earlier you take this action, the better. You have two options when you're coming to the end of your deal, and that is either to remortgage to a new lender or to secure a new deal with your existing lender. With both these options, you can start the process up to 6 months before your current deal ends. Now, the easiest option available to you is sticking with your existing lender and choosing a rate switch, also known as a product transfer. This allows you to secure a new rate with your existing lender without going through the underwriting process and without going through the legal process again. Now, the perks of this are, like I just say, it's going to save you time in terms of securing a new deal, but also if you've got changes to your circumstances, so you've recently gone from employed to self-employed, or your overall costs have gone up and you can't afford a new mortgage with a new lender, you don't have to go through that underwriting process with your existing lender. It's a very simple process of selecting a new rate with your existing lender and without any underwriting involved. And the other option available is to move your mortgage to a new lender, which is known as a remortgage. This allows you to source the whole of the market to secure the best deal available to your needs and requirements. By moving to a new lender, you have to go through the underwriting process again, therefore you must meet the criteria that specific lender has for you, which could vary from your existing lender, so that is something to be aware of. So given the current climate, one of the key priorities for every household is to minimise monthly expenditure, and a big part of that is your mortgage. Now, as part of this process, if you are sticking with your existing lender or moving to a new lender, there are adaptations you can make to the mortgage in order to reduce your monthly payments. These include things like increasing the mortgage term. The longer you have your mortgage term, the cheaper the monthly payments, or you could make a restructure to the mortgage so you can bring in the element of interest only. These are all points that need to be considered carefully and discussed with a professional who can cater a recommendation to your needs. Here at Bigmore Associates, we are whole of market advisors, therefore have access to the full range of lenders and products available across the market. This allows us to source the best overall deal to meet your requirements. If you'd like to know more about Bigmore Associates, please feel free to get in touch and we'll be happy to help.